the market has changed dramatically.
Bitcoin, Ethereum, and all of these top coins.
Stupid for not holding it.
Alt season this year or maybe next year.
Move on from the fantasy of the alt season that we're used to have. Token no longer lives in a vacuum.
Now is the great time to build.
We will have fewer and fewer coins going dramatically up. Too much sell pressure on the launch.
Hello everyone, this is HodlFM with you again, and today we're going to talk about TGEs, about most popular narratives for Web3 businesses of this cycle. And my guest today is Maryna Barysheva, who is the CEO at LKI Consulting. Hello Maryna, and thank you for joining us.
Everyone, it's a pleasure to be here, and thanks for having me.
It's so nice to see a woman in Web3. There are more and more of them in the industry as I see, and compared to earlier days, but still not as many as we would want to have probably. Maybe you could tell a little bit more about how you joined the industry, what you guys do in LKI Consulting.
Sure. So I actually didn't come to crypto as a trader. I didn't come to crypto as a degen who was sitting in a hoodie trading coins somewhere in my mom's basement. I came from tech. I was a non-believer in crypto. I was the person who was the first screaming, crypto is a scam, don't buy it. I'm going to do anything that is not crypto. Payments, fintech, maybe even sports betting, casinos. But I was busy growing one of the largest Lithuanian startups. When I came, it was only 30 people. And when I left, it was 330 people at a 100 million valuation. So something that I learned down the line is how important having a good product market fit with actual innovation that serves the audience is. But once the company becomes large, I still wanted to move faster. I wanted to be in a more high-risk industry that has a lower entry barrier, but more leverage, more potential. And this is how I ended up in crypto. Since then, I worked with a lot of go-to-market strategies, launches, product and token launches, worked on external communication strategies, helping projects unlock new markets. And I ended up taking over the agency from Laura Cornelia Namedinova, who is currently the Chief Ecosystem Officer at Gate.com. I was very fortunate to work with her for many years. And as an agency, LKI Consulting has been in the market for 10 years. We worked with over 260 projects. When I say 10 years, usually on the stage or in podcast recordings, I feel so old, honestly. Like we've been seeing the early stage ICOs when crypto used to be this Wild West to now having proper frameworks, to having guidelines for how projects should operate, to having institutions come in to adopt crypto. So what we're doing as an agency right now is split between two divisions. We have our retail division that is busy helping projects go to market, launch tokens, and we have our corporations with their digital asset strategies, as well as understanding how to go to market primarily in the UAE region, getting on board.
Yes, that's really cool. That's actually a lot of many years you've been around. It's cool. So you have seen lots of things and lots of happenings in the industry, how it changed from not having any kind of infrastructure at all to what we have right now. And I think it's really cool. And maybe you could say, what are the main narratives in Web3 right now? Because previously we saw like some projects like definitely conquering the top of the cycle. Right now, the story is a little bit different with the institutions coming into game. And right now we don't have a very well-structured altcoin season. We don't have it at all, if I may say so. What do you think is the most like popular narratives right now?
I think the perception of narrative altogether changed and what it means for the cycle. If we're comparing the 2021 cycle, when there was a narrative, it meant that the top 10, 20 coins in that narrative would pump. We would have KLs posting listicles and saying, right now it's all about AI, so these top 10 coins in AI would immediately go up. This is not the perception of narrative that we have right now. The life cycle of a narrative has also shortened. In the past, we would have one narrative go for 2 years, 3 years. Now it's looking closer to 3 months. So what we're actually observing right now is not a call for narrative, it's a call for alignment. Alignment with what institutions requires. It's every project right now creating their own DAT. It's cross-border payments. It's what these large organizations can actually adopt in their everyday operation. And the second thing is, of course, the magical word called revenue. Because what we've been observing in the space is having lots of inflated metrics, lots of vanity things. And we have who claim to have 1 million users and sit on a 17K MRR. So when you're a retail investor, you should not be looking for a narrative. You should be looking whether the project is currently matching the dynamic of where the market is going. And the dynamic where the market is going right now is institutional alignment and projects who actually operate as businesses and who are able to generate revenue for themselves.
So no stones anymore and no punks.
I don't think so, no.
But that was crazy and funny times, actually. And if we're talking about institutions and the projects being launched right now, previously they've raised mostly via like ICOs or TGEs, whatever you call them. Do people still do TGEs? Is it still a popular thing?
It's first of all a question of what a TGE is. If you want to have a token, you need to have a token generation event. A second question is whether people still go through public rounds or through ICOs in order to raise capital for the said token, or they're just going live on DEX or on CEX is a different question. What we've seen right now is that the most successful token launches have their liquidity locked with institutions. They're not expecting for the retail to generate them by pressure. And they also do not trust the retail to not give them too much sell pressure on the launch either. Why? You need to go back to the historical context of the launches. Retail wants to make money on altcoins. We have not had a normal altcoin season. You are used to having your Bitcoin go up and then shortly after altcoins to follow. That hasn't happened because majority of the Bitcoin price action is dependent on the institutional inflows. This is why in that regard, we have not had a normal altcoin season. Retail hasn't made their money back in order to have one, capital, and second, confidence to go and invest in other coins on better conditions. That's the first reason. Second reason is what I call the tendency to solve issues in the space by creating more issues in the space. If you look at how Launchpads operate and how they're managing the public rounds, I mean more traditional Launchpads, not the newest models. Traditional models had a community of people who would go in and who would want to hunt for better token opportunities, and they would take a token at a price of, let's say, 30 cents instead of buying it on an open market afterwards for 50 cents, and they would trade for this difference. If tokens didn't get launched well, so people were losing money, they were unhappy. What did they do? They went to Launchpads and started complaining. So Launchpads introduced 100% refund policy. Why would someone in their sane mind not invest in a token that has 100% guarantee to be refunded to you if it doesn't go well? So we have completely unsustainable sell pressure that is coming from the Launchpads. The rounds claim to be closed within 40 seconds, within 1 minute, but then the same rounds get refunded for almost the same amount.
I didn't know that, to be honest.
Yes, majority of Launchpads right now offer 100% rebate. They did see that it negatively impacts the success of the launches, so they're reworking some of the mechanics behind them, but this has been the case for the past year and a half, almost 2 years. And that subsequently leads to us having a discussion of how centralized exchanges operate. Because majority of top centralized exchanges, unless you're this fantastic project that has been endorsed by Vitalik Buterin, they will not take you unless you're doing a public round in Launchpads.
This is very interesting.
And that leads us to a closed loop of how is it you launch, so you do not spend $2 million in listing fees and on generating your trading volume while still sustaining a healthy chart. This is why majority of our clients have actually been going through a story of getting a DEX listing first, when you can set up the liquidity pools, when you can control how your situation is going. And if the token manages to float, you get a CEX listing as a secondary strategy.
So everyone right now has changed and moved to DEXs. Is this correct?
I wouldn't say everyone. Definitely not. There is still a lot of projects who choose to have CEX plus DEX, so just CEX at the beginning, and this is completely fine because there is no set playbook for every project. What we have seen with our projects, basically DEX first, then CEX on a secondary basis, unless the project has a lot of budget to experiment.
Okay, this is very interesting, and it makes a lot of sense actually. And from what I've seen, probably that lots of tokens are being first launched on a DEX. This is definitely true, but there are so many tokens being launched on DEXs like every day, because anyone can come, just pull in some like liquidity and launch a token. It doesn't take too much time. It doesn't require any extra knowledge or something like this. Just probably general knowledge of crypto would suffice. And how did the marketing approach and the growth approach change over this time? Because just like I mentioned right now, there are so many tokens being launched on DEXs. How does the token stand out, and how do projects actually market it? Where do they go? What do they do?
We are switching to an industry where token no longer lives in a vacuum. Token is not a product strategy. Token is not a business strategy either. What we hear when we are working with very early stage projects who are still looking for their product market fit. I'm advising some of the projects who are looking for fundraising as well. And we ask them, where is the edge? They answer, the edge is in the fact that we're going to have a token. And I explained to them the fact that you have a token and the approach of first you build and they will come is long dead. In order to stand out in the space and to actually have interest around your token, you need to have two things: a working product that satisfies the pain points of your audience, because token right now acts much more as a share in the company rather than a separate speculative mechanism. Or you need to have incentives and a token offer so well aligned within the ecosystem that you're building that people feel, pardon my French, stupid for not holding it. When we educate our founders, we explain to them that there are three main categories of people that they're supposed to target. They're supposed to target followers, users, and traders. In the ideal case scenario, this would all be the same person, but realistically, there are three different individuals who live in different districts of the same city and never even see each other. I'll give you a very good example if you don't believe me. I bet everyone in our audience is having a wallet. So whatever you use in Trust, MetaMask. When was the last time you questioned yourself, who is the team behind MetaMask? Who runs it? What is happening on their socials? Do they have any sort of campaigns, partnerships, whatever? I couldn't care less. That doesn't prevent me from using their product every single day. I don't have to be their follower. I don't have to be their community member. In the same way, if there was Melania launching, Again, I couldn't care less about the backstory. I couldn't care less about the community. I needed to buy that token because I knew in 24 hours it would make me a lot of money. And this is how the mentality of a trader, user, and follower fundamentally differs. They're not looking for the same things. Follower wants to be entertained. Some of them want to farm tokens in exchange for engagement with the audience. Users want to make sure that whatever pain point they're experiencing on a daily basis gets closed. And the trader wants to make money. It's cold-hearted. There is no soul in it. Traders are there to make money. So within your token marketing strategy, if you're not appealing to three different segments of people, you will not be able to stand out. It is not about picking one right communication lane. It is not about picking one right narrative. It's about tailoring your messages specifically to these three segments.
Okay, that's nice. So what is the recipe of a successful TGE then right now?
I wish I had that answer. Realistically, the recipe is we sit down and we start looking at the project, whether it has merit, whether it has the legs to stand on. And usually the legs come from properly organized tokenomics, where the incentives, the unlocks, the structure makes sense. So the token has a financial model to fall back on. Then we're looking at the product, whether once the token launches, there is something for the project to operate on, whether it actually brings innovation to the industry. If you're building another protocol on Solana that is a little bit faster, a little bit better, a little bit cheaper, I am sorry, but the industry has become way too oversaturated for that. And then the last but not least is, of course, where you're bringing your buy pressure, whether it is coming from institutions, whether it is coming from retail. If from retail, why do we think they're going to trade on the day when you launch? And how do we ensure that the token has a strategy after the TGE? Majority of projects actually underestimate that, but a good recipe for success is having a plan for what happens with the project 2-3 months after the token launches. Majority, again, of founders have very misaligned expectations on how well they're going to do, and they count their chickens before they hatch. So my advice is to have optimistic and pessimistic scenarios for how the launch is going to go in terms of your financial models, in terms of your engagement with the community, and based on that, plan the roadmap.
Okay, that makes a lot of sense, because a lot of people thinking, yeah, I'm gonna do the TG, but they don't know what to do next and how to develop project afterwards. And seems that they even have some kind of roadmap what they're gonna build, but when it comes to the actual actions, people don't know how to do, and this is why most of projects failed in 2017. Let's take those who were actually trying to build something, not to scam people, but those who were trying to build a product. But many of them failed just because they didn't have any proper sound understanding of what should be done after they get this money. And now let's wrap it up and move to the topic, which is very much discussed right now, the alt season, the absence of alt season, I would say. I would like to ask your opinion. Right now, everyone is looking at Bitcoin, Ethereum, and at all of these top coins, but the newer projects and altcoins seem to get less attention from the audience. Do you think it's going to stay like this? And what's your proper own projections for the alt season this year or maybe next year? Are we actually going to see it?
I think that we need to move on from the fantasy of the alt season that we're used to have. The market has changed dramatically from the perspective of institutions coming in. We will have much less volatility than what we're used to. I don't think we'll have another day where Bitcoin is at 120 and then it drops to 20K. within a day. I don't think that will be the scenario anymore. Institutions hate volatility. That also brings a negative part of it, which means that we will have fewer and fewer coins going dramatically up as well. So if we're given a straight answer, I don't think we will have the same altcoin season that we're used to. It will be much more muted. It will be to the OGs in the space. It will constantly look like another correction, like another short pump, and they will be looking for the space to become different. But I think that the combination of these short corrections, the market going up, the market going down, will be the new constant. And what we need to align ourselves with is more of the macro trends. So once the global economy will be heading toward recession, the overall crypto market will be going down, and once we'll be expanding, the overall crypto market will be going up. But that crazy multiplier of 50x on an altcoin, in my opinion, is long gone. And we need to prepare ourselves to play a long-term game. Playing a long-term game means actually building a product, because surprise, surprise, you weren't able to get rich quick, and you weren't able to cash out as fast as you would want it.
Now is the great time to build, I guess.
Now is the great time to build. Yes, now is the time for everyone to remember that at its core, blockchain was supposed to be an underlying technology for building products. And yet somehow we diminished it to only being about the token.
Great. Thank you. Thank you so much, Maryna, for such an insightful and interesting podcast. It was Maryna Barysheva with us. She's the CEO at LKI Consulting. And don't forget to like this video, follow our channel, and leave some comments about your thoughts. What's happening with the alt season? Are we actually going to see it? Or is it going to be definitely muted like Maryna just said? Thank you so much, and see you during the next session.